Today we'll be going over what I think will replace the original Ponzi scheme and the Tulip Mania to be the new Ponzi scheme, and we'll also go over a little bit of market updates. These are the topics we'll be going over today. Again, these are not investment advice. These are just for informational purpose only. Please do your own research. Now, I'm sure many people have heard about the GameStop and a bunch of other short squeeze worthless stocks. I don't want to go over what exactly happened. It's pretty. There's a lot of coverage on that. And it's pretty self-apparent. I'll just do a big overview and talk about the implication. Now, they're all money-losing businesses. What that means is their earnings are negative. So if you, let's say, you invest in them, your return of capital is reduced because they're not making positive cash flow. Now that's what makes them worthless. And some of these businesses will most likely go bankrupt, and then if not, like they're going to require a huge business change, like a business model change. For example, like GameStop with a lot of retail stores. And even if they are to move on e-commerce, like what are the possibility of their ability to, defeat online giant like Amazon kind of thing. And hedge funds, they like to make money wherever it can be made. And that's why they've done the extensive research, they've done the valuation, and they've decided to short these worthless stocks. Yes, obviously, they are greedy, very greedy, and I'm happy that they're playing the game where when you short something, a risk comes up with a short squeeze where the price goes higher and your margin gets cut, and you have to buy back. And when you do, then all other short sellers are getting pressured, and they have to buy back or cough up more margin, and the cycle continues. The point is that shorting is very dangerous, but it can be profitable. But these guys have done their research to determine that these stocks are worthless. They should be zero. And I'm okay with the retail investors trying to stick it to them, saying like, hey, we don't like you guys, so cost them to lose money. That's great. But the problem is the only way for retail traders, like anyone, to bid up these stocks is that if they sell. And so you have all these kids like, oh, I'll never sell. Like you see it go to a price like pre-market up to 500. During the day trading was only 400 something. But now it's like back down to like $60. Like, and it's a no-sum game, because meaning anyone that buys into it and sell, like to make money, anyone's profit in this game is someone else's loss, because the underlying business does not generate a profit, does not generate a positive cash flow. So you can't just hold on forever and expect the company to pay a dividend or the company buys back its own share. You have to sell to someone else. So the fact that the price gone all the way up to like $500 pre-market, meaning someone had to have bought it. And that someone, like at the top ticket, if they by definition will have a loss, because the price doesn't go above that, and they can't get any cash flow from the underlying business. So this is just a big Ponzi scheme. So you're just trying to drag in as many people as possible. Hopefully they don't sell, because that's why everyone was like, hey guys, hold forever, don't sell, don't be an idiot. They're probably the ones who are either idiots themselves, who are actually holding, thinking it's gonna go to the moon, or they're trying to cover their own positions, selling them before others do. So eventually, it broke down. It was quick. I was I never got involved. I knew it was, a giant bubble and, it was gonna pop. And now you see news of these guys just, throwing their life savings in there and just losing everything. Like a lot of these new retail traders have no idea what they're doing, and a lot of them are like first-time traders. Yes, they felt like the game was rigged because the trading platform stopped them from trading, and that probably helped slow down the flow of the whole thing. But eventually they had to sell, and if they don't, you pay the price. So, no, this is going to be the theme of. It will be a great example for what we will talk about later. Now, I've talked about Tesla for a few times on this channel. I mean, my conviction is still that, the valuation where it is, it doesn't make sense. It should be much, much lower. Maybe $100. I don't know. We'll see. But um, it is different than the other worthless stocks that we just talked about. It is making a profit, but the big but is the only reason that they're making a profit is because of carbon credits. Without the carbon credits, if you actually look at the financial statements, they're actually losing money by selling cars. They make up the difference by selling carbon credits. And again, this is like this stock has been bid up by like a bunch of retail investors who like Elon Musk. Like every time he tweets out like a tweet, his squad gets excited and they just buy his stock. But valuation, it makes no sense. Like Tesla's valuation itself, the market capitalization equals like the next 8 to 9 automakers, and the market share it has of the vehicle market is like below 2%. So just wrap that around your head. Sure, you can say no, it's a tech company, so you can't use vehicle valuation. No, at the end of the day, it sells cars. Doesn't matter what bells and whistles you add to the car, it sells cars. Yes, you can factor in the carbon credits. That's great. 2% of market cap or market share, and you want to have the next like 8 to 9 automaker market capitalization? Come on, come on. And recently, Elon also added 1.5 billion of its cash because a bunch of idiots keep bidding up the price. So he did the right thing to issue like 3 times over 2 years of new shares, and people bought it up, which is hilarious. So now Tesla has a lot of cash. Like Tesla is probably the most financially backed company right now because it's all equity, and it's great. Like it won't go bankrupt, but it's not generating much profit. Like yeah, you have a bunch of cash, but what can you do with it? What they should do with it? They should just try to buy Toyota or like the other automakers. Like that's what I would do. But no, Elon Musk, you know, the he loves to gamble, so he puts it into Bitcoin, also touting Dogecoin. You can it's such a meme that it's going up, but it actually has characteristics that makes it better than Bitcoin, like hash rate and stuff. So I'm not suggesting to buy either. I'm just saying between the two. But with Bitcoin, after adding Bitcoin, what he's effectively doing is, yeah, maybe he's just trying to short trade this, his crowd, because these guys love to gamble and they think, oh, it's new tech, no one understands it, only they do. And it's kind of like a self cycle. So people who buy Bitcoin also like Tesla, probably buy Tesla. People who like Tesla also like Bitcoin and what Elon stands for. And so it's the same crowd, but what happens to the investors who like, so Elon bundled Tesla with Bitcoin, at least a portion of it, like at least a $1.5 billion of cash. And you've seen Tesla shares not appreciate yet, even though the price of Bitcoin has shot up. So what this is signaling is possibly some investors of Tesla does not like being bundled with Bitcoin. So we'll see how this continually develop. Again, I have shorted Tesla. I have got stocked out from, stop loss, but I think it has to go down, and I'm excited. Now we're into the meat of the whole theme of Ponzi scheme. So this is a small channel. Like no one, really watches these videos. And if somehow I get some attention, and it's a lot of hate because of talking down crypto, then it really shows the mob mentality. Because anyone who doesn't like, you can like anything, you can like anything or doesn't like anything, but if you talk shit about crypto, then all of a sudden you're an idiot and you have no idea what you're talking about. So it's great. I can't wait. So it's important to not confuse the technology of blockchain with the currency. I think I like technological innovation that, yeah, I think could be a revolutionizing technology, but don't confuse the tech with these cryptocurrencies. So first off, it is not a money producing asset, meaning like let's say money producing asset could be a stock or a bond. So stock, you hold it, you can pay dividends. The company can make, if the company makes money, right? If the company makes money, you can pay dividends, you can buy back its share. You can get your return on investment in those two ways, or you can sell it, obviously. But what happens is when the company makes more money, it has more cash on the balance sheet, so your share of the company doesn't increase, but your share of its assets increase, like the price increase, so you can sell your share for a higher price, or a debt instrument like a bond, which pays interest through coupons. And then, nor is it a commodity. A commodity is an income producing. So let's say, you hold like lumber. When you hold, lumber or like a piece of like a weed or corn, it doesn't generate anything, but it has its use. You can use it to do something. Cryptos don't do either. Yes, you can use it to buy stuff. Yeah. But I'm talking about the ultimate use. So first of all, it doesn't generate anything. Like just holding it does not generate anything. Yeah, people are like, oh yeah, you can store it with someone, and the crypto savings account, they generate a lot of cash flow, or like give you like high interest. But the problem is, by itself, it doesn't generate anything. And then there's no ultimate use like a commodity. So it's not an income producing asset, it's not a commodity. Nothing backs it up. It's just confidence. It's just like fiat currency. So people who say, oh, don't buy fiat currency. You're jumping into the control of central bank. We want to, deregulate everything. That's fine, but you're jumping from, fiat currency to digital fiat currency. Really? Like at least fiat currency are needed for taxes. If you don't pay your taxes, the government, like they demand taxes to be paid in that currency, and that's the ultimate use for fiat currency. Where if you don't pay your taxes, they'll come hunt you down. And then there's this mob mentality where, again, anyone that doesn't buy it, they don't understand. They're stupid. They're idiots. You know. Um, and you have to buy it. You just keep buying it no matter what. Um, and the media coverage, like everyone is touting. Like if you look at CNBC, it's crazy. Like who's paying all those grayscale ads? It's hilarious. Like when everyone is so bullish on one thing, at least it's time to be a little bit skeptical. And then another thing is, central bank are announcing their digital currency. I love it whenever there's news about crypto, like these guys just like, oh yeah, it's great news. All news is great news for crypto. Stop for a moment. If central banks are pushing out digital currencies, and if you buy into the belief that cryptocurrencies are a direct competitor of central bank digital currency, don't you think that a power-hungry central bank who loves control, also, it's bundled with the government, don't you think they will try their best to combat its competitors? Come on. And the thing is, they don't have to outlaw it. They just have to make transaction costs high enough that it's not beneficial. And because, especially with Bitcoin, like because it has a limited supply, what happens is once you get all the supply of 21 million, what happens is the transaction cost gets very expensive the more you transact, and like per transaction wise. And that's one of the things that Dogecoin is more superior in, where it has a slow but fixed increase. So you don't have that big jump in transaction costs. Now the real question is, this is again, same thing with GameStop. That's a great example, really. Everyone is thinking, okay, you hold till the end, right? But it's a no-sum game because you can't get money. It's not an income-producing asset, nor is it a commodity. The only way to make money in crypto is you sell it. The problem is how long until someone breaks the rank. Someone say, what, I've made enough money, I'm selling, I'm buying myself, a Tesla, I'm buying myself a house or whatever. How long until people start selling? And yeah, it could go to whatever price it goes to, because this is all completely just people betting with each other. It's that problem of finding the greater fool. But how long? Eventually it has to break. So, do you want to be the one that's holding do you want to be the bag holder at the end and lose everything? That's the question. Okay, so I thought I'd give some, general market updates since I'm working on a video. So stock market, again, still strongly overvalued. If you look at currentmarketvaluation.com, you can see on the right here, the S&P price over earnings ratio. Like if you take the S&P, if you take like the FANGs out, like you do like the top 6 versus the 494 companies, like the FANGs have pretty much led the whole thing. Everyone else is mostly like earnings are, down and just very heavily weighted. But if you take a look, so the latest print, February 12, we're sitting at 2 standard deviation, where the dot-com bubble passes that at 132%, while the housing bubble popped right around 1 standard deviation. So we're way above, we're 1 standard deviation above the housing bubble, but we have yet to hit the dot-com bubble. But it looks like it's getting there eventually. So it's a bubble searching for a pin anytime now. And you know, it's not a matter of if, but a matter of when. Bond market. So this might be something that breaks the stock market. US 30-year at 2%. You know, how long before it hits 3 or 4? Um, US 10-year, where majority of the debt is priced in, 1.2. Like I said, past one, I'm looking for 1.5 maybe. But how long until the Fed comes in with yield curve control? We've seen it before in other variations. It doesn't work. It helps, target the rate. I guess that's what it's, used for. But it's just printing money. It's just instead of printing amount as the target, they're using the yields as the target to how much to print. It's the same thing. Currency market. So the US dollar index is seeing some pressure after hitting 91. Again, long term, I'm bearish on the dollar. I think it has a long way to go and it's a long trend. But short term, it is unknown with oil prices. I'll talk about it later. With oil, like if US, if oil is traded using US dollar, when oil goes up, then there's a higher need. Also with bond market yields going up, there's also more need to it. But they are printing a lot. So US dollar index, no idea, but definitely something to continue to watch. Long term still bearish, short term no idea. So soybeans, they're pretty much all harvest in Brazil, so we'll see the delivery data. I think there has been some significant impact from the weather over the winter. Corn, same thing, almost time for harvest. We'll see on the data. Again, my intuition is that has been impacted. The demand side, China might be buying even more. Wheat, again, waiting for more data, but that one's more on Russia, but they already increased the export levy, so probably not doing too hot. Lumber, I saw it last year, but I missed it when it hit 900 bucks. When it dropped down to 500, I thought it was done, but I didn't expect it to make a new all-time high, it's back up to 900 now. I missed it. I'm not gonna buy into it. I don't know how much further it can go, but it really helps assess the real estate situation, showing you that a lot of people are jumping into real estate because of historic low rate, and just people like more bigger space. Like if you look at the real estate market, like a 3-bedroom condo is considered like a luxury. Like that's insane. Just because people want more space when they're working from home or at home for the most part to for this pandemic. But and recently, like Vancouver, like in January, has experienced record low inventory. So like a house, a property is like normal to see like 20 offers. That's crazy. So how long until inventory picks back up? Maybe in the spring, in the summer, maybe we'll have a slight pullback or a meaningful correction. So we'll see. So interesting. So commodities update, energy. Like obviously, I talked about oil, crude finally breaking 60 bucks. I'm not surprised it did. I'm very happy with my oil stocks, and I do expect it to hit 80 bucks this year and possibly even 100. I don't think it will make a new all-time high like over 140 this year, but that is coming, especially with Biden administration like really just shrinking the U.S. supply. So U.S. turning from a U.S. exporter to U.S. Like oil importer. So that's really going to hurt the U.S. economy. Uranium spot price, still you can see like 27.7 on the last roll there. Yeah, but the stocks have started their rally. I'm pretty happy with it. Picked up a few junior. but I think it's probably due to the big guys like Chemical and Casambatom not willing to transact at these spot prices. So the futures market and the contracts are probably at much higher prices, and I think the supply is slowly getting drained out. So all in all, very excited with the energy sector, with the the push for more renewable energy and shrinking of oil production in US. So precious metals, the idea is that I think this last correction is the last effort to drive down these prices for the bullion banks to get out, just get their shorts out, because I think the game is up where uh, the you have seen a physical shortage for a long time. Premiums have been high for a while, but with the recent, it's funny, like Wall Street bets, like um, it's interesting where they lay their eyes on, like with the worthless stock short squeeze. Obviously, that couldn't last, but this they found they really hit gold by striking like silver. Um, so we'll see how long until it actually happens for the paper price to catch up with physical. So gold, let's finish gold first. Gold, short-term risk, I think it can go down to 1750 as a last effort for the banks to knock it down to get out their short positions. But the next rally, I think it's going to, like, it's making a new all-time high, and I think it's going to 2400 before any meaningful pullback. Silver, like physical coin, like it's having a big shortage, but I don't like it will really be meaningful for this silver squeeze once it gets to the industrial 1000 like 1000 ounce bars, and they're starting to feel a bit of the pressure. Maybe the 1000 ounce bars are being melted down to make coins if the premiums are high enough, so we'll see. But that is the catalyst. So the 1000 ounce bar have to break, and then all hell breaks loose. This is not like the GameStop short squeeze. This is much bigger market, much more manipulated, because we're not talking about like one or two hedge funds. We're talking about the big banks like JP Morgan, who's holding the future contracts. So short-term downside, like maybe 13 to 23. Honestly, like if you don't care about like a few bucks downside, just buy. Who cares? Like, and if not into like SLV, the ETF, buy physical or that. Like that's buying SLV, because what happens is they their custodian is JP Morgan. And there's no way for the amount of inflow they're having that is actually buying into physical, and they can just easily adjust the percentage of physical in their portfolio, so it doesn't matter. So next rally, I think it's going to 40 bucks before any meaningful pullback or like correction. Maybe it could, I think it could double like a night, like if it comes up really bad, or the industrial users come in like, hey, we realize we can't get the bars anywhere, so maybe they come in and buy a bunch of futures contract. Who knows? Anything can happen. So platinum group metals, the PGMs, they're finally starting to pick up like a lot quicker. Platinum never really made an all-time high when gold did, and it got above 2000 last time gold would just touch 2000. So maybe platinum is coming to reclaim its throne, and if it's looking, if it looks like it is starting, and if it does try to catch up with gold, it still has a long way to go. So we'll see. I bought like a few, just some like small bars.